Fuck this notice, bro. Bro. Kaboom boom boom boom. Guys. Hi guys. Hi guys. If you are actually watching the stream now, type 1 in chat. Type 1 in chat now if you are watching the stream. I am not going to be trading gold today because the gold entries are all gone for me. But currently there is a crude oil trade that I personally took before the New York Open just now, running about 29 pips. And then Nasdaq, not really looking at much, but I want to see Nasdaq go back down for this week. I don't want to play with Nasdaq this week because of the consolidated news from last week, NFP, and tomorrow is PPI, so we don't really want to touch anything too dangerous, and Nasdaq's a bit dangerous for now. Yes, don't have any particular interest in trading this. All the entries are gone. The 4-hour New York. Expansion candle, bro. 4 to 6. Morning, nothing much. Fuck man, there's gotta be better music, right? What the fuck? Yeah, this is more my thing, bro. Hello guys. Hi all. I took a crude oil trade before stream started. So personally I'm up about 45 pips. I want to look at gold because it's at the golden zone right now. Okay, if the M5 forms below this, I may take it. If you think trading is hard, you are wrong. But if you think trading is easy, you are also wrong. Let's wait for the 9:30 volume to come in first. Hey, Miss Clicks, did you take the crude oil trade? Do you take the gold trade? Sell limit where? Fall below the M5. What I meant is, do you know what a market structure shift means? Basically, it's when you have a let me just block this first. Okay, let's say you have a red candle here and it has a body close. A red candle here with like a strong body close below this low, because this was an attempted swing low but it failed. So if price were to break this low and close below, we would count it as a market structure shift. Means it may flip bearish, but it's not 100% guaranteed that it will flip bearish. But again, we have a lot of fair value gaps here on the M15, a big one especially. Playing with the M5 here is, I wouldn't say it's scary, but it will be less guaranteed, so I'll be waiting for the 9:30 volume to kick in first before I actually start. Okay, the periods, I know you're new to trading, so the periods where you should be trading, the Q zones will be Asian, London, and New York. Asian would be Asian would be around, say, 8 a.m. to about 11 a.m. in the morning Singapore time. London will be 2 p.m. to 4 p.m. Singapore time, and then New York would be 8:30 p.m. to 11 p.m. Singapore time. These are the timings where you want to time your trades in these zones. Trading is not that hard. Okay, so all you need to do is just have 3 criterias. Number 1, point of interest. Number 2, criteria. Number 3, entry models. Okay, not everyone tells you this. Like, how do you execute a trade? Like, since we are all new to trading, like I experienced this last time, I was like, where do I enter? Do I just enter off this newly created fair value gap? No, I don't. There isn't just like, there's like a shit ton of fair value gaps you can find in the market. It's just that, which fair value gap should you take? The reason I took this trade, number 1, point of interest. This is a strong demand zone. This area here, especially since it got rejected from this last time in December, and then it even swept liquidity here. So this became a strong POI for me, and I didn't want to trade yesterday and Friday as well. So today it's still hovering above this zone, and it has actually tapped it 3 times. I decided to wait for New York open, and then I took a entry below my New York open with the first fair value gap forming, and then we long this, and then I took this. It may sound very complicated. Your entry model it doesn't need to be as complicating as it needs to be. Your entry model can just be a FVG, and then the criteria here were that before the open, this low gets broken. Not broken, I'd say just swept, because this is the closest form of liquidity that the market can offer. If this gets swept and this liquidity gets swept, I can have a very strong bias to long here, because I know liquidity has been grabbed and price actually wants to go up. When you're trading, think like you're a bank. When you're a bank, what do you want to do? You want to win people's money, retail traders' money, people like you and me. So put yourself in the bank shoes. What are these? What all these wicks here? These are people's stop loss. People place their stop loss here, right? Let's say they long here. People's stop losses are here. People's stop losses are also here. All at the bottom. Everyone's stop losses are at the bottom. So think like the bank. What do you want to do? You want to liquidate some people. And this is my thought process when I trade. This is just like a rough idea of what I look for when I trade. I look for liquidity, purely off liquidity, and then does it align with a zone? It can be a breaker block, order block, demand, supply. It can be anything, bro. And then it can also even be fib levels. What's a fib level? It's basically a percentage discount given in the market. Let me give you a good example on a blank chart. A lot of people don't know how to use Fibonacci, but let me teach you in a quick 1 minute explanation. You take your fib out, draw the fib from the direction it recently swung to. So what is this? This is a swing low, right? This is a swing low. So you draw your fib from the top to the bottom, and if it's a swing high, you draw the fib from bottom to the top, and then you align it. So what do these percentage numbers mean? The percentage numbers mean a percentage discount they have on the price itself. Okay, take a look at this. Okay, let's say my swing high was here, this peak here. Okay, look at this here. If you understand what I'm saying, type 1 in chat now, and then I'll continue with my explanation. Okay, so what do these percentage numbers mean on a Fibonacci? Okay, so the percentage numbers represents the amount of discount you have for a swing high or swing low. Let's say this swing high over here, I drew the fib from the bottom to the top for this swing high. It can be on any time frame where you draw the Fibonacci, but primarily I use it on the bigger time frames. But right now, as an example, I am showing to you on a 5-minute time frame. So the Fibonacci means a percentage of discount that is provided for institutional traders or retail traders. So this swing high, 78.6% level, is your optimum entry. Is basically where ICT optimizes the fib for the best entry you get in the zones. But it's not always respected on the lower time frame. Let me go to a far better. Maybe I can show it to you right now actually. But I won't be please do not take any positions here yet. On crude oil. This is a live example. Wait, let me just clear my whole chart for you to see. Okay, so do you see this Fibonacci? There is a 78.6% level that kept on getting rejected. Here, you can see the rejection from this area was strong because there's a super long wick here. But even though the rejection is strong, doesn't mean the buyers will overpower. It doesn't mean that sellers from this entry will overpower the buyers on this side of the chart, on this swing high. So you always have to wait for confirmation from your point of interest, whereas some people have their point of interest on this 78.6% swing low, this swing low on the fib. They may be waiting for this and they already took an entry and they got fucked for it, bro. And then what is 66.0% and what's the 61.8%? This is called the golden zone for the Fibonacci. Let me show you. Look, price came back here on the 66% level and the 61.8% level, and it rejected it, giving a good downwards movement after rejecting off this golden zone. But obviously the buy side was too strong and it overpowered all the resting entries here and decided to continue flying. Same for this. There is a golden zone here. So what price can do is actually do this. Or price can also do this. Or price can also do this. Every time it reaches these points, like the golden zone, the OTE, there may be some resistance, but not always the case. Hey, it's Joe. What's up, Joe? Let me just draw back my Oh, wrong chart. Yeah, this one. Solid, bro. Solid. I like. But I haven't hit 1 hour yet. We waiting. But sadly, I never give this live on stream, bro. I took this before stream. If not, I could have give the simple man plus this misclicks, bro. Flying. Why a sell limit order on 2518? Can I know your reasoning for this? Same as last time. Interesting. Wow, take it at 2520, dude. See how. Cause you shouldn't set a sell limit here, bro. You can see price action so strong here on the bullish side. Price action so bullish. You're fighting against many people, bro. It's so bullish. I don't even look. There's like no point in looking and trying to counter trend here, bro. It looks very bullish, bro. The FVGs are getting respected. He has a supply zone at 2523. His setup looks like this. I don't know, maybe like this, something like this. On the 30-minute, he drew a supply zone. And oh, he also wants to see liquidity being taken also, I guess. What's this resting liquidity here? Then he has, yeah, there's resting liquidity here, and I think he wants to take the, let's see, let me forward to Joe. pretty solid trade, bro, I must say. Your lines is like you mixing the thing together, bro, then you trying to align all the criteria together. See, trading is not that hard, bro. Stops covering this high. Yeah, it looks juicy, bro. Yeah, it looks juicy, but it's a counter trend. Yeah, bro, every trade you can take every trade, bro, but just risk manage properly. Oh, what was this bomb? Oh, if you take a M30 entry here, then there's a possible 62R, bro. Whoa, wait, actually. Tomorrow's CPI, tomorrow PPI, what? Oh, you scare me, bro. Oh yeah, it is. Oh shit, bro. I thought PPI, bro. What the fuck? Thursday is. We want to trade the manipulation, bro. 12. Thursday is PPI, then Friday is no news. Friday is a sexy day, bro. This whole week, crazy stuff. Wait, I can actually give like a super swing order entry here. Yes, Joe. What, Joe? Joe, what you say, Joe? Joe, you keep quiet, Joe. I made you come here on stream, then you know, bro. You become the real Yan Tao, bro. People don't come here watch trading, bro. They come here wang on your face, bro. Sheng Da, can you reply my admin? My admin trying to be nice, bro. Just joking, bro. See, simple man, this is how the golden zone. Look at the golden zone rejection, bro. If this closes below this candle here, I may take. But I want to see this XA. I want to see this M5 retest, and then we can take it back to the opening of today, 2506. It will be a very simple trade, right? Simple, man. See, Shakta, you can be good friends with Joe, bro. Joe is a nice guy. Wait, simple man, if you don't understand me, I will personally come give you my Telegram, bro. Have you, simple man, have you been asking the admins for advice? If no and you still don't understand, I will come personally DM you, bro. If there's anything you can't follow, please message us. I will direct them to me. I will ask them to direct you to me. Sorry lah, Joe. I brain fart, bro. I brain fart, then my angmo kena confused, bro. Who kena SL? Eh, sialah, the M30 FVG got respected, sia. Who is say? Let me see whether got any FIP level to show you. I have. Simple man, see. Golden zone rejection, bro. 61.8% level discount. Fibonacci. As you can see, price created this swing high movement. When it touched a discounted zone at 66.18%, it got rejected and then it pushed up, showed some resistance. Well, this would have been a good entry, yeah. This minute 30 entry on crude oil, because it aligns so well with the golden zone. But the 5-minute BPR form, bro, so disregard this. Overlapping. Now, if you see a candle with a weak close like that, and then this candle suddenly closes like this, you don't want to look for any entries anymore, cause you know the market is going to fuck around, bro. Look, this is just toying around, bro. I don't want to get like fucked right here. Even if I take a sell with this aligning FVG, because this price action really indicates that it tried to break structure. Now it's breaking structure again. So I'm not gonna mess. Retracement. How long must the candle be to be valid? What do you mean, how long must the candle be? Like this is valid, bro. This retracement candle is valid on the H4, bro. Turtle soup, bro. Turtle soup. Turtle soup 21R sale. Bro, is there like better background music? I'm falling asleep, bro. Let me just use NCS, bro. It's like those black shot montage, bro. Oh yes. Bro, the no copyrights are so ass, bro. It's like I wanna use better songs, but then it's just not. If you go to the 30-minute time frame, they probably wanna buy. OTE entry, bro. Whoa. Now look at this, bro. This small breakaway was like the this some crazy stuff. Yeah, you know, honestly, I actually wanted to enter there, but I was like, never mind. CPI should be. I honestly hope CPI data is like bad. I mean, good. But today, as expected, I already told you where to target, bro. Today's accumulation day, lah. I say every day, bro. Today's accumulation day on a Tuesday, bro. See, price enter close same spot, bro. Open and close same spot. Wait, let me change the music. It's damn cringe. Yeah, we can have a psychology session hosted by our one and only Joe on Discord for all our premium members. You guys will be able to hear Joe speak for the first time. That's correct. Psychology is trading is 60% psychology, 40% strategy, bro. If you have the worst strategy in the world but you have the best psychology in the world, you can still be profitable. swept the true day. Okay, I took my profits for today already. I took like some partials at the top. Oh, my chart is a mess. Oh, crude oil really want to go down, sweep some liquidity. Stops covering this low. If people are still in, I don't think they are fucked. They shouldn't be. Well, lucky never take this shit. No confirmation, no take, bro. Are there better no copyright sounds? No. Hello, bro. What do you not understand? No worries, bro. We are here to help you. Also, you learn pip count already. That's good. That's good. What else do you not understand? What am I watching? I know this is a open, low, high, close candle. 1 hour hasn't closed above below. M30 hasn't closed. Well, Ming Shen asked you watch Ajo already. Well, he made you watch Ajo already without the fundamentals of it. Will be very confusing. Yes. So I actually think you should go and continue with what you're doing, like trying to trade on a demo account, cause yeah, the being thrown straight into using live funds really very daunting, bro. Especially if you don't even know how to use MT5 from the start. So yeah, bro, I think you should go ahead and continue doing what you're doing. But yeah, just now I was explaining. Wait. Hold on, wait, I need to see what this is. What's happening? Wow. What time frame do we use? We use, okay, let's say I'm gonna clear my chart here. This can be any pair that you want to play. Let me just clear this chart. Okay, so let's say I'm looking at silver now. Okay, so for longer time frames, right, there actually is more for swing trading. But since price tends to respect higher time frame point of interest, we use higher time frame point of interest to find our entries. So for example here, let me go to the 4 hour time frame, and we have a 4 hour time frame POI here. Let's say for this sell, and then we have a swing low here. We draw the fib. Actually, let me explain without the fib level. As you can see, let's say you're a scalper. Let's say you're a scalper, you're a swing trader, or you're an intraday trader. Let's say you have a H4 FVG created. What's a FVG? It's a fair value gap. Basically offers fair value to all the traders in the market. Basically buyers and sellers can actually take play, and then it's like it lets the opposite side participate in the movement into the fair value created. So since you have this huge move downwards, a fair value gap has been created. And then what do you see on this right side? This H4 fair value gap got respected, as shown here. Let me just mark this down as fair value gap. Okay, let's say I want to draw, I mark this out first so I can go to here later. Okay, so the place where it entered through in here, this is generally where you want to find your entries at. So it entered this POI as drawn here on the H4. This is still the whole entire H4 FVG. This is where you drop to a smaller time frame. It can be your 15-minute to look for scalps. It can be your 5-minute to also look for scalps. And then, okay, when you are trading, the 3 things you want to find. Number 1, point of interest. Your point of interest are mostly found on higher time frames, like for example this H4 FVG that was created. This H4 here. This is an example of a point of interest. A point of interest can be number 1, order block, fair value gap, liquidity, discount PD arrays on your Fibonacci, and breaker blocks. So for example, this is our point of interest of this H4 FVG, and we want to use it to trade downwards from this H4 FVG. Point of interest. Okay, number 2, we have a criteria. After price hits our point of interest, secondly, we want to wait for criteria. So every setup should have a criteria in order for you to place a trade. If you just randomly place a sell right here, there is no backing to your strategy, and you won't even know why you lost. If you lose a trade and you have a criteria to hit, and you hit that criteria but you still lose, you should be still able to understand why you lost the trade. And fundamental analysis, this one I cannot really teach you because fundamental analysis wise I'm not very strong. But for criteria, my criteria here is for after this break of structure or this market structure shift has formed after hitting the POI, means it shows me that it has bearish intentions after that. So you can either use the 5-minute time frame to use your entry to find an entry, or the 15-minute. It's all up to you. But for criteria here, hit my point of interest, form a market structure shift, form a fair value gap before the market structure shift, which is right here. You possibly can even use the 30-minute time frame. So point of interest criteria already said, form the fair value gap. It can be on any time frame. If you have a bigger time frame fair value gap on the point of interest, is an even bigger confluence to your trade. So I can actually draw this out. So number 3, what is number 3? Entry model. I want you to write this down. These are the 3 steps that taught me how to trade. A lot of YouTube videos will not explain this, but personally, all a trader needs to understand is not to learn so many strategies. If not, you'll get analysis paralysis, meaning you learn like 10 different strategies and then you get fucked for it because you think of too many things when you trade. So all you need is these 3 things: point of interest, criteria, and entry model. What entry models should you use? Entry models, there are many different kinds of entry models. So for your own research, what I want you to do, tune in, is I want you to go learn yourself on YouTube how to find your own entry model that fits you, because everyone uses different entry models, everyone uses different criterias, everyone uses different points of interest. Like some people use breaker blocks as point of interest, some people use order blocks as point of interest, some people require stricter criterias for their trades. For example, they need like an even bigger time frame to trade on, bigger time frame confluence on after price taps into their POI. And then entry models, there are a lot. Personally, I use something called turtle soup. Then there's another entry model called balanced price range. These are the 2 I mainly use. Yeah, so for you, I want you to go and study for yourself, and please do write down notes on it, and then you can send the notes to our premium admin, or Ming Xuan, then we can go through what you don't understand with you. Once you've mastered the fundamentals, we can go into more in-depth stuff with you and every one of the premium members. And then we can show you how to execute more trades, but we don't actually want you guys to execute more trades, cause sometimes less is more. This is where Mr. Joe will go through trading psychology with you, which is also very, very important. Master Joe will teach you how to harness your inner trading instinct, bro. Trading is 60% psychology, 40% strategy. Even if you have the shittest strategy in the world, but you have the best psychology in the world, you still can be profitable. The problem I find with YouTube videos is that they just jump right into the video and then they explain, oh, have this, enter. But they don't tell you why. So what I want you to do is to learn your strategy that you want to pick. There are many to learn everywhere. And then after you found a strategy of your choice, you come to us, and then we'll go through what you don't understand and why you can use this specific entry model. I expect all of you guys, all my premium members, to be doing your own notes and studying trading yourself at the same time. Because we want to help you trade also, but we expect you guys to put in some effort for yourself. No problem, bro. We as Onlypips, we want our members to know how to trade themselves, not just like trade based off signals. We don't want you to pay a subscription for anything. We just want to teach you how to be better and teach you how to trade yourself. We give you the fish and teach you how to catch fish.